Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, April 9th, 2020, and we again find ourselves in the final hour of the trading day. In my opinion, for me at least, the most valid time for me to make the majority of my buying and selling decisions is right at the end of the day, in the last hour, but in particularly right in the last few minutes before the market closes. I say this because during the daytime, you have the algorithms, day traders. They're the ones controlling the prices. At the end of the day, you have the large financial institutions coming in with size. In my opinion, they're the best equipped. They have the best technology. They have the smartest people. They're dealing with the most money. And they, in that last hour, they start taking control of the pricing away from the day traders and algorithms. And I like to piggyback on what they're doing because I think they're probably the best indicator for the price of what's happening with it at the end of the day. So that's why I make the majority of my buying and selling decisions at the end of the day. Frees up your day. You don't have to sit in front of your computer all day, which is nice. I did have a couple day trades today, though. With this volatility, it's been a good opportunity for some day trades. So I'll share those with you in a little while. So let's see what's happening here. Hey, John, good to see you. Who was it had target 2810? Glenn, maybe? Glenn is kind of the target guy. Let's see. It got the 2815. Oh, he's way off. Good call there, huh? Good to see you, John. Hey, I got your email. I haven't replied yet, but yeah, absolutely not a problem, bud, at all. I'll get back to you on that. Kamal, hey Greg. Hey Greg. I saw Greg in the message there. He says, "Hey Greg and all." Hey Kamal, good to see you, bud. Appreciate it. Hope you're having a good day. Always nice to have you here. So listen, kind of an interesting day today. Boy, we were up over 500 points earlier on the Dow. Now we're down one. Now we're only up 158 points. So we're 163. We're up about 0.75%. Nasdaq is about flat, so underperforming. S&P is up 20 points, up about 0.75%. So huge rally today, especially at the open, but we've given a lot of it back. So, all right. Dan is here. Hey, Dan. Hi, Greg and everyone. Is it hard to give our teacher an apple? It is hard to give our teacher an apple, so let's give him a thumbs up. Appreciate that, Dan. I appreciate thumbs up anytime, anywhere, any place. Thank you. Nice to have you here, Dan. Bob, hey, what's going on, Bob? Nice to have Bob here. Steve Burns, what's going on, buddy? Good to see you. Always an honor, always an absolute privilege to have Steve here. Steve does so many great things. He's written so many books, and if you haven't looked at them or read them, you should. I've read his books multiple times. He has a great website out there, newtraderu.com. He has a great 3 times a week video newsletter where he breaks down the market, gives you his take on it, shows what trades he's taking, selling, all that kind of stuff. I'm scared to show it on YouTube, Steve, because of YouTube issues, so I don't dare, but I do at least want to put it out there. But good to have you here, Steve, and I know you have a bunch of trades on. We're going to go over those, but hope you and Holly and the dogs and everyone is doing well. Hey, Frank, good to see you, bud. Frank says, hello, Greg and all. Actually, he says, Helly, Greg and all. Helly, back to you, Frank. Good to have you here, my friend. Hope you're doing well. By the way, I did not know this. I should know better. Market is closed tomorrow, just in case everyone probably knows but me, but it is closed tomorrow for Good Friday. So this will be the last trading day of our week. So if any of you are trading weeklies, bars, you maybe have to make your decision based upon today's. So anyway, I'm glad somebody told me I'd show up tomorrow. The market wouldn't be open and be embarrassing. So anyway, thanks, Bruce, for cluing me in on that. So, and thank you everybody for coming. I always look forward to seeing everyone. I think we have such a great group. We have such a great community, and I feel very lucky that we have such smart people with such good comments and observations and, sharing of their ideas, and just really grateful that we have this group. So I look forward to seeing you every single day. Okay, so listen, here is the plan for today. First of all, we're going to go ahead and run the U.S. legal disclaimer. We're going to get that out of the way. Secondly, we're going to come back and take a look at my current positions. We're going to talk about when I bought them, why I bought them, what methodology I used, what the trading setup was, and then most importantly, how I'm going to manage them going forward, either to the upside or the downside. Then we're going to get to your trades. A few of you have been kind enough to share your trades with me and us and the group, and so I am going to go through those. We have quite a lot of them, so look for a whole variety of different type of trades. So I'm looking forward to going through those. After that, we're going to spend a few minutes where I like to talk about trader psychology, good trading words of wisdom. I mention this every day, and I apologize for beating you over the head with it, but guys and girls, it is so important, right? You have to make a plan. You have to learn how to trade. But after you learn how to trade, you have to be able to follow your trading plan. And it's very difficult. It's so much easier to say than to do. We're impulsive creatures. We see profits, we want them. We see losses, we want to get out of them, or we don't want to get out of them because we want them to turn back into winners, right? So, if you find yourself not being able to follow your plan, you have some work to do on yourself. You have some work to do to improve your trading, because you can have a good trading plan and you need a good trading plan. But if you can't follow it, what's the use of having a trading plan? So that's a skill that you have to develop, work on. In my opinion, the best way to do that, the best way to stick to your plan, reduce your position size till you get to that sweet spot where it still matters if it goes up, but if it goes down, you're like, I'll just let the plan play out. I generally use about a maximum of a 10% position size. Recently, I've been using half position sizes, quarter position sizes, mainly quarter position sizes, because the volatility has been so high. And if in a normal market, a 10% position size is fine, but in a huge up and down market like this, a quarter of a position size is the same as a 10% position size, right? So you have to kind of calibrate it regarding the volatility. So where's I going with that? I just blanked. I blanked. So, about the psychology, right? That's part of the psychology and the emotions and all that kind of stuff. Woo. All right, Greg, get it together. Then after that, we are going to go down through my watch list, take a look for some potential entries today. I have 3 quick requirements before I enter any position at the end of the day. First is that I need a confluence or a combination of indicators lining up. I look at each group of indicators like MACD and RSI and ATR channels. I look at them as potential groups of buyers, and you'll put yourself in the position to have the best chance to have a winning trade if you're in the company with as many other buyers as possible. So if I look at indicators as different groups of buyers, if they line up, I look at them as multiple groups of buyers. And like I said, you have a better chance to have a profitable trade if you're in with a lot of other buyers. So look for a confluence or a combination of indicators. Number 2, make sure you have a good risk to reward ratio. You can have a great setup with a bad risk to reward ratio, depending on what your filters are, like RSI or ATR channels above you. Whatever you use, it's fine, but just make sure with what you use, you have a good risk to reward ratio. I need at least a 2-to-1 for me to get interested in a trade, meaning if I'm willing to lose $100, I want to be able to make 200 or more to the upside. Number 3, make sure you do not have too many correlated positions, right? If you have 4 technology stocks, they're either going to probably go up together or they're going to go down together. You need diversification in trading, not just in the stocks. Yes, you want diversification of industries in your stock, and ideally something like oil or gold, bonds, something outside of that. But also, it's important you have diversification in the type of trading approaches. I think the more diversification, the better. In your trading approaches, in the type of stocks you own, it kind of smooths things out, and you get a little from this and you get a little from that, and you may have taken profits quickly here, but let this other one run. In my opinion, it's very important. And then lastly, make sure you pay attention to your account heat, meaning what percentage of your capital do you have at risk at any one time, even if it's in completely uncorrelated positions. But the problem is sometimes uncorrelated positions move together. So I have a rule, never more than 60% of my capital ever do I put into the market at risk. And that's a maximum. It doesn't mean I have to have 6 positions all the time. So anyway, with those 3 requirements, I'll go through, I'll mark a few, potential candidates. At the end of the day, I'll go through them with the fine-tooth comb and just try to find the one that's the best, cleanest chart, the best setup, the most well-defined support levels below, the most well-defined resistance levels above. And I'll also look on both time frames, you know, the daily and the weekly. I think it's very important to analyze potential positions on multiple time frames, because some people just trade dailies and they go off those indicators. Some people trade weeklies and they go off the indicators on the weeklies, right? So you don't want to get to a point where you have a huge group of buyers coming in to sell on the weekly and a huge group of buyers coming in on the daily. That'd probably not be a good place to take a position. So, and then if I find something that qualifies, if I can narrow it down at the end of the day, I'll go ahead and take the position, and that will be that. And then after the market closes, if anybody has any questions for me, please let me know. Any comments, any jokes, whatever you want. If you need clarification on what I discussed, please let me know. I'm here to help. If you have any stock symbols that you'd like me to look at before the market closes, if it would be helpful to get my opinion on it before the market closes, and you think it would also be helpful for the group, please go ahead, put it in, but please put a star by it in the chat so I know that it's time sensitive, and I'll do my very, very best to get to it. Okay, so that is the plan. So if you could be so kind, hold on, I'm going to run the US legal disclaimer, and I'll be back in about 40 seconds. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, let me make sure my mic's on. Good. Hey, Boss John's here. Hello. Good to see you. I hope I'm pronouncing that right. Good to see you. I appreciate you coming back. John is here. Good to see you, bud. Yellow smiley apples. That sounds good. Zach. Hey, Zach. Good to see you, my friend. Hope you're doing well with the doors. Hello, Greg and friends. Marco. Hey, Greg and all. Boss John, how are you? Boss John's my cousin. Oh, that's great. Well, thanks, Marco, for turning him on to the end of the channel. And I hope you're doing well there in Slovenia, my friend. Brian is here. Hello, Bri. Good to see you. Always proud of Brian. Nice young man. Comes here to learn about trading and investing at 18. Jeez, so great. So great. Yes, Marco recommended me this room, and I'm very glad. Oh, good. Thank you. Thank you, Marco, and I appreciate you coming by, Boss John. It's good seeing you every day. Hello, Frank. Good to see Frank. As always, I think he has a poem for us. Problem is, see, if Frank wrote me just a comment, I would think it was a poem. So I have to kind of read it through it and see if I find something that rhymes, but he does say poem at the beginning. The best trade you make might be the one you don't take. As volatility rages, relax and be calm as a fisherman on a lake. Don't trade just for sake. Let's lease the market roar and eat you and your bait. Okay, one more time. The best trade you make might be the one you don't take. As volatility rages, relax and be calm as fishermen on a lake. Don't trade just for the sake. Let the market roar and eat you and your bait. Thank you, Frank. Always really great to have your poems, and I'm always just in awe every day about how you and Joe can write these poems every day. Like, I'm super impressed. I am super impressed. Andrea, hey Frank, I don't want the market to eat me alive. I don't want it to eat you alive either, Andrea. Good to see you, my friend. Need to do our follow-up call. I'm looking forward to touch base with you again. Frank says, Andrea, LOL. David, hey David. Hi Greg and all. David from Denver. Hey, what's going on? All right, you did change things up. Okay, good to see you, gamer. Good to see you. All right, so listen, we got a lot of stuff to go through today, so let's get going. Apple. I do have some long-term calls on Apple out to June 16th of 2021. So they're out there a ways. I did buy them on the weekly bar here. I did buy them. They're $250 calls, long-term calls, define risks so that if the market goes to zero, I only lose a certain amount. My trading plan on these calls, even with calls, you should have a trading plan, but my trading plan on these calls is this week here, we had the V1, the big V1 bar. That's when I bought them. If it closes below 236 on the weekly, I will go ahead and get out. If it rejects the 1 ATR channel on the week, I will also get out. If it closes above, I'll keep it and then start and continue to trail it. But they're 250 calls right now. We're at 267.14, so they're in the money and they're profitable, and I'm grateful for that. Gold. So big day on gold today. I did buy gold back here on the 26th of March. I bought it when the 5 EMA crossed over the 20 EMA. This is a good back tested approach. Moving averages are good. They're a good trading approach because they have a structure to it where if you're wrong quickly. If you're right, you could be right for a long time and right big. So I did buy it here at 153.30. Went sideways for a couple days down, and then immediately went against me. I did have to get out of half my position when it closed below both the 5 and the 20. That was my approach, but I did keep the other half, thankfully, and now it's up nicely. I've been phasing out up here, and then did hit 2 profit targets today. One at 156.58 and another one at 158.51. Just tagged the 1 ATR channel up there. But my trading plan here is either the 5 closing back below the 20, a rejection of the 70, or some kind of big bearish reversal volatility bar. So anyway, so far, really glad for the gold trade. Google. I did buy Google also with the 520 EMA yesterday. I bought it yesterday, the 8th. I bought it at 120.06. With the 520 crossover. My trade plan for this is if the price closes below both the 5 and the 20, I get out of half. If the 5 crosses under the 20, I get out of the other half. To the upside, a rejection of the 70 RSI is my initial profit target. We do have the big looming 200-day up here. So if it moves up, holds above the 200, I'll keep it. If it rejects the 200, I'd probably get out. We also have some resistance here of the 3rd ATR channel and the 50 confluence here. So I'll just have to see how this one goes. I only did take a quarter position on this again because it's under the 200-day and also because the volatility is so high. So pretty close to even on this trade. Oh, I forgot to show you on gold. I did have a day trade on gold also. Sorry. Let's go back here. Had this on the 5-minute. I bought here. This is 5-minute bar. We were above the 1 ATR channel. We came back into the value zone. We moved sideways. We made a lower high. If I make a lower high, I have to wash out that low. Well, this bar did it. And then I had this V1 right here. I bought this somewhere around 158. Moved up nicely, went up, 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 up. I got out here at 158.51. So I made about 50 cents on it, which wasn't too bad in just a little over half hour. I got out here when we had this V1 to the downside and the bearish engulfing bar and a V1 to the downside. But it was a nice little 50-cent trade on gold. So good little day trade there. Okay, back to business. PayPal. I had a nice short on PayPal today, and let me show you what my thinking was on this particular trade. Okay, on the daily, we got right up here. We rejected the 50, the 100, and the 200-day moving average. So on the daily chart, we thoroughly rejected this. So I thought, okay, on the larger time frame, this looks like some serious resistance above. So I dropped down to the 39-minute chart. I shorted here at 106.90 when we had the V1 reversal. I took it intrabar. I didn't wait till the end. I took it when it triggered intrabar. Then as it started to go down, I switched to the 5-minute bar so I wouldn't have to give up so much profit on a trailing stop. So I shorted here, and you can see on the 5-minute bar here, we had a pretty substantial big down bar, larger than 1 ATR, lots of volume. Just happened here after a V1 to the downside. So I got 106.90. It went down, 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 down. I got out here at 105.69 when we rejected the 200 or the 100 and also had the V1. So it was from 160.90 down to 105.60. So almost $1 in about half an hour. And then it rallied after that. And I thought, I'm a genius. And then it went down. I was like, oh, I guess I'm not. But anyway, it's 2 good day trades, so I'm happy with that. And then SPY, real quick. I know I discuss this every day, and I'll try to be quick, but in case we have some new viewers, I do buy the SPY every day at the close of the market. I hold it overnight. I sell it the first thing the next morning. I do this based upon a long-term study from Liz Ann Saunders at Bespoke Invest. Since 1993, they tested 2 approaches. Approach number 1, buy the SPY at the open, hold it through the day, sell it at the close. If you did this every day since 1993, negative 13.9% return. Second approach is what I do, and that is buying at the close, holding it overnight, selling it the first thing the next morning. Using this approach compared to this approach, you, instead of losing 13.9%, you would have made 634.2%. Past performance is no guarantee of future results. That is true. It may never work again in the future, but any setup may never work again in the future, right? You have to base it upon good back-tested numbers, and it has a good track record. So the blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see the buy in the evening, holding it overnight, selling it the next morning has a clear advantage over the other. Over time, this has been a really good, profitable approach, although in between, there are years or multiple years where you have drawdowns, but in the big picture, it has an upward slope. So this year has been horrible, although the last 10 days or so have been pretty good using this approach. So just trying to claw back, the losses that I took this year. But 2019 was a fantastic year using this. So it's like any other trading approach. So sometimes you win, sometimes you lose. Even good approaches have losing periods. So that being said, I did buy the SPY yesterday at the close at 274.03. I sold it this morning at 277.81. So some really good trades the last, let me see, 1, 2, 3, 4 days in a row. This has worked well. So, but again, it's a marathon. It's not a sprint. And I've been positioning only a quarter of my position size because it closed it's under the 200-day and volatility's been high. But I did want to stick with it, and I'm glad because I've had a nice recoup of profits in this last move here. So anyway, I will be buying this again at the end of the day. All right, now let's move over to your trades. All right, here we have Kamal. Kamal did buy Cisco at the end of the week last week when it rejected the 200 week and closed barely above, giving him a good risk to reward ratio, at least as close as he could get. It has moved up. He's definitely up on the trade. It was up higher. But he's definitely still up on the trade, and his stop is going to be a close below the 200-day moving average to the downside. Not sure what his stop's going to be, or his profit target's going to be, or how he's going to get out to the upside. But most importantly, always most importantly, is a close below your stop. You need to just go ahead and get out. Okay, so that's Kamal. Bing He had a nice trade here. It's been a couple week trade on Clorox. He bought it here, 175.05. Looks like he bought it the day after the V2. Kind of moved sideways for a while, but up nice today, up 1.76% today. So congratulations, Bing He. Okay, Bing He also bought RWM, which is the ProShares short on the Russell 2000. This one hasn't worked out so well. It's gone down. I'm not sure if Bing He has gotten out of this or made any adjustments, but I don't recall that he has. But please let me know, Bing He. So that one was not so good. Let's go over here to Steve Burns. All right, so Steve Burns did buy the Qs based upon the 520 crossover. This is a good crossover. He bought it at 196.30. Right now it is at 199.63. So congratulations, Steve. I imagine Steve's initial stop is if the 5 crosses back below the 20. This is a good back-tested approach. I just decided to pass on this. Looks like it was a mistake so far, but I passed because I didn't like the bearish reversal bar, and I didn't like that we got up there and rejected the second ATR. And that's just a filter. It's just my personal preference. Sometimes it works out, sometimes it doesn't. In this particular case, market did not care and it went up. So congratulations, Steve, on that trade so far. Alibaba, Steve also bought with the 520 crossover. This is a good back-tested approach. He bought it here at 197.80 when the 5 crossed over the 20. This one has gone down a little bit, but if the 5 crosses under the 20, I imagine Steve is going to get out of this one, hopefully for a small loss, and hopefully it goes up. Okay, Alibaba. Steve did buy Alibaba here when the 5 crossed over the 20 at 197.80. Did I just go over this one? Ugh. Anyway, this one's gone down a little bit, bullish engulfing bar, but again, probably with the 5 crossing under the 20 is where he'll get out on this one. I think I just went over that one. Okay, IBB. Here's another trade by Steve with the 530 EMA. This is a different crossover system. This, he got a really good feel on this one when the 5 crossed over the 30 and got it on a downward bar. So we got the best price, 109.70, something like that, and it has moved up nicely. It's at 113.56. So that's been a really good trade for Steve there. Okay, back over another one for Steve. Look at this monster trade. Steve took AGQ, which is double leverage SPY with the 520 crossover. Again, this is a good back-tested approach for silver. It's up 7.44% today. It was up, man, it had to be up 10% maybe at some point today, but fantastic, Steve. Really good trade there. Again, this was one that I just chose not to take just because it had rejected the second ATR channel. It was a little high for my parameters, but sometimes your parameters and your filters, sometimes they work for you and sometimes they don't, but you have to be aware of that and just be okay with times you take it, don't take it, and it goes up, and there's other times you don't take it and it goes down. So anyway, fantastic trade on that, Steve. If there's any changes here today, let me know. Another trade from Steve, Monster Energy with the 520 crossover. Bought it here around 60.20, currently at 60.56, so that's up a little bit as well. And again, probably using the 520 cross under as the initial stop. That's just my guess. Has rejected the 100-day. So if there's any changes on that one, Steve, let me know. And then lastly, oh no, we have 2 more for Steve. Amazon. Okay, Amazon. Steve did buy when we had the 550 SMA crossover. Yesterday, he bought it at 20.44 approximately, and right now it's slightly down there. And then last but not least, Goldman Sachs, blah, blah. This has been a nice trade. He took the 520 crossover right here about 176.90, and it's up $6 today, up 3.71%. So nice variety of trades for Steve there. That's the most trades I've seen Steve had in a long time. So looks like the majority of them are working out. Okay, so that's that. Bing He, hi Greg, cut loss for RMW. Okay, well, I'm glad to see that, Bing He. We didn't want to let that one get out of hand, right? And good to see you, Bing He. Bing He says, take a look at Chewy. Should have taken the trade. Yeah. Shoulda, woulda, coulda, huh? Oh my. Yeah. It was a little high though, but sometimes high goes higher. You just never know. You just have to have your rules, you know, and if your rules let you take it up there, then fine. But yeah, in hindsight, for sure. Yeah, like Andrea says, hindsight. Now, Doji, thoughts on CPB? Yeah, not bad. I mean, we were below the -1 ATR channel. We came up into the value zone. We had a couple days down. We had a pretty good V2. Here's day one, day two, day three. Closed above all the moving averages. MACD's green, closed above the 50. Not too bad. Let's look at the weekly. Weekly still right there in the value zone. So not overbought on the value zone, above 50 on the RSI. Not too bad. Just have to decide if you take this trade, what would be your stop. I mean, yeah, sure, you could use 200 if you wanted to. This big bar up, I don't know. Maybe if it were me, I'd probably use the 20. But that's just me. Glenn, hey Greg, good to see you. IWM is outperforming Q's. Thoughts? Well, I think with the stimulus plan, I think it's more focused and structured for small businesses, which kind of makes sense when smaller businesses are more included in the Russell 2000. Frank says mid-cap strength is bullish. Yeah, exactly. Exactly. Good point there, Frank. Steve says, yes, AGQ was at 10% at the high of the days. Yeah, what a monster, huh? Oh, is the market taking back off? Yeah, it is. Very nice. Very nice. Okay. So listen, before we go through my watch list, before we start taking a look at potential setups for today, for end of day entries, I do like to talk about trader psychology. There's a lot of good Facebook and Twitter channels out there. They spend a lot of time posting good things for us to read, helpful things, a lot of wisdom in what they post. And Rainer Tio is on Twitter at Rainer_Tio. It's a great channel, has a ton of followers, puts out good information. But I read this, actually, I had an email from somebody asking about, the best trading strategy and what fits with them. And so when I saw this, it made sense. Many traders make the mistake of trying to find out the best trading strategy. In reality, it's about knowing yourself so you can find the best strategy to suit you, right? There is no one best strategy, right? There is no, this strategy costs $10,000 and only people that pay it can get this strategy. It's not like that at all. There's all sorts of good strategies out there. There's so many different strategies, right? But they have to fit your personality. And what Rainer is saying, you need to know yourself so you can find the best strategy to suit you. For instance, somebody could give me the best strategy for trading stocks at the open. It would be horrible for me because I don't like to get up in the morning, right? Just kind of an obvious example. Or somebody could give you the best end of day trading strategy, but you fall asleep by noon. Well, that wouldn't work either, right? Some people are longer term. They are fine with longer term trading, trend trading systems. Other people want quicker ins and outs, right? Maybe they're better to be day traders, but there is no best strategy. The best strategy for you is the one that fits with your time schedule and your temperament and your holding time and just whatever makes sense for you. I mean, when I do my teaching, I teach what I trade, but it doesn't necessarily mean it has to be exactly, you have to do it exactly the same way, right? Dr. Elder teaches triple screen, right? And he always mentions that he has people come up and say, Dr. Elder, I love triple screen trading system. But I made some tweaks to it. I hope it's okay. And he says, of course it's okay, right? And my students, if my approach, if you want to make tweaks to that, that's totally fine. Whatever is sustainable for you, whatever you can do for the long run, 100%. The only thing I might add though, you have to have small losses. You can do whatever else you want. You can be as creative as you want to the upside when you have profit, right? But you do have to keep those losses small. That's one thing that you really can't fudge on or be too creative about, right? You have to do that. But many traders make the mistake of trying to find the best trading strategy. In reality, it's about knowing yourself so you can find the best strategy to suit you, right? Another idea or example of this is options. right? Sometimes options really fit people's personality because they don't have to be as precise. They have more time. It's not as intense. So anyway, thank you, Rainer Teal. Thanks for all your good posts. I appreciate that, and hope you have a good long weekend. Good morning, Jackson. Hey, bud. Good morning, Greg. Everyone. Hope your day is going wonderful. Some rockin' picks there, Steve. 100%. And I hope you're doing well, Jackson. And we'll chat later. And not sure if you were able to get where you're going with your car and all that stuff, but let me know later, okay? Um. All right. Well, let me take a look over here. See what's happening. Mm-hmm. 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 Well, it looks like we're coming back a little bit now. Apple went positive again. That's good. All right. Oh, I almost forgot. So listen, I'm going to go down through the charts. I'm going to have to make good decisions today on my entries, right? Choose wisely today, Greg. Choose wisely today, Greg. Choose wisely today, Greg. And that goes for everyone else. Whenever you're placing a trade, please choose wisely. Think it through. Do I really need this trade? Do I have enough indicators lining up? Am I diverse enough in my holdings? Is it a good risk to reward ratio? So, I like to read this every day now. I hope it's not too annoying, but I think it's very important that everybody chooses wisely today and thinks about it several times before they hit that buy or the sell button. So thanks, Diana Cooper, for that. Jackson says, here to small losses. Perfect, Greg. Great analogy. Thank you, sir. Glenn says, interested to see if S&P closes at the sloping 50 EMA. Let's take a look. So there it is. There's the downward sloping 50 EMA on the SPX, and so far we have rejected it. So we'll see how it ends up. Mount Doji says SPY weekly looks like we've reached resistance. Yeah, so many charts out here looks like we're reaching resistance from both a Fibonacci standpoint. Here's the high of the move. Here's the low of the move. I'm not surprised to see it come back and challenge that 50% move of the retracement back to the upside. But in my experience, a lot of time that's where you're going to at least stall out, if not go down. And it doesn't look like on the SPY we've rejected the 50 RSI yet. But to me, those are two indications of 50% bearish retracement and a rejection of the 50. But some charts do have that. Good call there, Mount Doji. Steve says, thank you to Jackson. I did, bud. Thank you. Oh, good. I'm glad to hear that. Okay. How we doing on time? Oh, we're doing pretty good. We are doing pretty good. So, Apple. I was going to take a trade on Apple yesterday with the 520 crossover, but I decided to take Google instead. And as you know, with my rules, I'm not going to take two technology companies on the same day. Apple's doing okay. It's doing okay. I don't see any new entries here for me today. It is above the 50 RSI. That's positive, showing positive momentum. MACD is positive. We're closed above the 1 ATR channel under the crossover. That all looks good. Let's take a look here at the weekly. On the weekly, kind of what I was just talking about with Mount Doji, we're getting close to that 50 Fibonacci point, and right now we are at 50.15 on the weekly, and the rejection of the 20-week and the 10-week moving average. So anyway, it'll be interesting to see if that can close over 50, but I'm going to pass on Apple. Adobe just kind of moving sideways. I would imagine Adobe is going to start making a move here either to the upside or the downside based upon this, consolidation and this base it's moving here. Sideways movement leads to breaks either to the downside or the upside. Unfortunately, we just don't know what direction. If we only knew, right? Okay, Amazon down a little bit today off of its lows, having some issues here with the second ATR. So nothing for me on Amazon. Boeing, Boy, did we come off the lows, didn't we? We made this low, we had a rally, we sold back off, we're back in the value zone. I just don't see anything on Boeing today. Berkshire Hathaway having a pretty good day. Sold off from the high, rejected that 50 EMA like Glenn was talking about with the SPY. I don't see anything on Berkshire. Beyond Meat, having a nice day today, but I don't see anything here. I would need the 520 does backtest well on Beyond Meat, but no crossover yet. Ideally, I'd like to see this pull back into the value zone, move sideways, have a V1 or V2. That's what I would be looking for. Caterpillar, boy, just pegged that 200-day. That's where the sellers came in. There's a lot of confluence of resistance up here. The 100, the third ATR channel, the downward sloping 200-day moving average, and it's down today. So anyway, it doesn't mean, necessarily, hey, we got to short this thing, right? It just means that it's finding some resistance here and may go down, may go sideways, might go up, who knows, but I don't see anything there. Carnival, what a monster Carnival has been. This is such a great example of a double bottom with the bullish divergence. We have a low with deep MACD bars. We rally nicely, get some green MACD bars. We come back down, we test that low. Even though we're just as low, we have no red bars. That's a double bottom with the bullish divergence, missing right shoulder. This day here was my signal to get in, but at the very end of the day, it closed under 30. It was under 30, went over 30 intraday, but closed under. And I had to stick with my rules, unfortunately. Dang it. And I missed out on this. But that's how it goes, right? You have your rules. You have to follow them. If you don't have rules, you don't have anything. And sometimes you're going to be glad you didn't take it. Other times you're going to regret not taking it. But it is really the best policy just to have your rules and stick with them and understand that sometimes it's going to work for you. Sometimes it's not. Dow Jones. I don't see anything here. If we look at the Dow Jones on the weekly, we're at a 43.48. Have some resistance up here. I don't see anything on the Dow. Walt Disney, kind of a reversal bar. We opened much higher, reversed down. Let's look at the weekly. Weekly still has that 200-day moving average above it. I don't see any clear signals there. We have, looks like a 520, but the 520 doesn't backtest very well. Etsy, ooh, look at this. Rejected the 200-day yesterday. Today closed above. That's very, very strong to be able to close above the 200 and the third ATR channel at that level. But from a risk to reward ratio, I'm not saying it can't go up. More likely it will go up than down, but it's a concept to try to get your head around. I think, yes, more likely than not, this will go up. But even though I think that, if I'm wrong, I don't think the risk to reward works for me. Facebook up 4 cents. Don't see anything there. Gold, of course, we've had a nice 1, 2, 3, 4, 5, 6, 7. Last 7 days have been really strong for us on gold. Did hit 2 profit targets today. Rejecting the third ATR channel, a little concerned about that and this big gap, but so far so good, and really nothing to do with gold. Google, of course, I bought the 520 crossover. It's down very slightly. I bought it 106. Now at 1206. It's at 1200. Bought this with the 520 crossover. Again, if the price closes below both the 5 and the 20, I'll get out of half. If the 5 crosses under the 20, I'll get out of the full the second half. And I'll just have to see how it reacts around the 200-day up there. On the weekly, I liked it a little bit because we had not rejected the 50 RSI yet, but slightly down on that one. Here's Goldman Sachs up nicely, rallying a little bit stronger here at the end of the day for Steve. So congratulations, Steve. But I don't see a trade for me today there. Home Depot, don't see anything there either. IBB, Steve has that on the 530, I believe, 530 EMA, so that's up nicely, up about 0.89% today. Intel, down pretty substantially today, isn't it, on a big day like that? I would be looking for Intel to come back into the value zone, right? We're above the green line. It means we're above the value zone. It means the way that I look at it, we're above value. I want a mean reversion back to the value zone. I'd rather buy at value or under value than buy over value. So we'd have to come into the value zone, find some sideways movement, look for a V1 or a V2. Russell, very strong today, as Glenn and Frank were mentioning. Big gap here. A lot of volume, but it's over the second ATR channel. Again, I'd look for a pullback before getting interested. Johnson & Johnson down a touch today. V1 to the downside. I'd like to see a pullback into the value zone. V1, V2. CarMax up nice today. Rejected the second ATR channel. MACD is positive. We're over 50. Let's look on the weekly. Did reject the 100 on, or 200 on the week, like pegged it exactly. So I don't see a good risk reward ratio there. Coca-Cola, pull back into value is what I would be looking for. Lockheed Martin, don't see anything there. MasterCard, looks like it's closing below its open, just too high for me. McDonald's doing fine, but it's just where it is in the ATR channels. It just doesn't look like it offers a good risk reward. Merck, very strong today. Looks like it might close above the 200. Microsoft down a little bit today, so it's had a tough time with that second ATR channel. It tested it, just moving sideways. I'd look for a pullback into the value zone. Netflix, just kind of moving sideways down slightly today. Nike ran into that downward sloping 50-day. I'd like to see Nike pull back into the value zone, look for V1, V2. Philip Morris been super strong. A lot of resistance here. Had the 50, 200 across on under, called the death cross. Yeah, I just don't see anything here. I'd like to see a pullback into value zone, give me a better risk reward. PayPal, this is the one that I had the short on today. We also have the death cross, the 50 crossing under the 200. I was thinking about possibly shorting this if we got a V1 to the downside, but I think I'm just going to let this one go and not do anything with it and just be happy with the intraday trade. Q's did open higher, come back lower, did test the 200 below, so we're in a bit of a battle here with trying to get over this price to the upside, but having support here at the 200. So if it closes above the 200, that is definitely going to be a good sign. But nice trade on that, Steve. Silver moving its way back up a little bit. Steve took the 520 across yesterday. Double leverage, twice as nice. Rejecting the third ATR channel on my screen. Oh, this is silver, sorry. He's up twice this. He's up AGQ, so he's up twice that. S&P had the nice little 3-point overnight gapper. I will be buying S&P again. Teladoc, V2 here, back in the value zone V2, but no sideways motion, so I wouldn't buy that. Bonds have been all over the place today. I don't see anything there. Tesla, strong, up 3.83%, just a little extended for me to buy. Twitter down today with the V1. See, here's day one, day two washes out day one, and looks like it's going to close below day one's close. If I were long on this, I might consider getting it out, but I wouldn't consider shorting that. UAL, oh boy, this one's painful every time I see it. I did buy it here with this V2, had this huge gap up about 18%. Did luckily scale out of some, but then it reversed back. I didn't like the reversal I got at, and it didn't care, and it just went right back up. So congratulations to anybody has UNG. At this point, I would look, we were below the -1 ATR channel into the value zone. I'd like to see a little bit of a pullback and then try to catch a higher low V1. Natural gas down today, rejected the 50 EMA and the 50-day. That's downtrend, and it rejected it, so that's not very bullish. United Healthcare, no. Oil, look at this. Look how high oil was today, and now look how low we are. That's a huge bearish reversal bar and a V1, right? The only good thing I can say about oil at this point, technically, is that we have the low, we had the high. It didn't even keep the 50%. That's, for a minute there, I thought it kept the 50%. So anyway, nothing on oil. I think they have an oil meeting coming out. Be interesting to see what happens. Look at VIX. Look at the small ranges VIX has had over the last month. We were just big, huge up, but now we're starting to stabilize, right? We're starting to go sideways. Not buyers can't make it go up, sellers can't make it go down. So this is kind of interesting. I'm sure it will pick a direction here shortly. Verizon, no. Walgreens, don't see anything there. Walmart, back into the value zone, close to a V1, but no sideways motion. Energy, big reversal off of the third ATR channel. Financials, just cruising up, doing really, really, really well. Real estate, big move on real estate, rejected the 50, not a good risk to reward ratio. Utilities did also have the death cross with the 50-200 and a rejection of the 200-day moving average, but I don't see anything there. Healthcare, no, and Zoom up a little bit. We came down, down, down. We have consolidated, moved sideways for a few days. Just not enough really to get me interested in that. Actually, I don't see anything today at all other than my SPY trade. I've got the Apple trade with the long-term calls. Gold, 2 profit targets, still have that position. Google, still have that position. PayPal, I'll take that off because that was the short today, so we'll take that off. That was a good short though. And then SPY. So the only new position today I'm going to take is SPY. And that's it. That is it. So let's go on over here. Donnie, what's up, my friend? That's my friend Donnie from California. Don says, from the close of the high to the close of the low, it has been a 50% drop. Today marks the 25% retracement. Plus, we are going to a 3-day weekend with news coming. Yeah, that's what I was talking about. We've essentially had a 50% retracement from the high. We went from, let's take a look here. We had the high and the low. Now we're right back at about that 50% retracement, which I look at as bearish. Doesn't mean it has to go down, but at least stall out. And on the weekly, on the Qs, we've also rejected the 50 RSI. So good point, Donnie. Just sold everything. I'm up 27% in my account right now for the year. Thanks for your help this morning, Greg. You are welcome, sir. You are welcome. Donnie's been on a tear. Jeff Stump. Hey, Jeff. Good to see you. Hello, Greg. I've watched over your shoulder and learned keys from you and improve my trades. Please accept my greatly appreciated. Well, thank you, Jeff. I appreciate you for coming here, and I'm glad that it's helping you. I really am. Jackson says, oh, that's right. Thanks for reminding me, Don, about the holiday there in the U.S. Jackson turns off some switches. Yes, it's been an incredible year time. Congrats on your success. 100%, Donnie. Dr. Jorgensen, time for a VIX trade, I think, but which way? Yeah, exactly, Bruce. That's the thing. Which way? I'm fairly sure this thing is going to move one way with all this consolidation. The thing is, I just don't know which way, right? So that's why you need signals. That's why you need structure. Let's take a look at the VIX, at the actual VIX index, and see what's happening here. Ooh, the 10 EMA crossing under the 30 AMA is a pretty significant signal that volatility is waning. Right now, the 10's at 49.54, and we are at 49.50 on the 30. So not quite a cross under, but that's a good back-tested approach to being able to short volatility when that cross under happens. But is it going to happen, or is this just going to be a kiss and we're going to go back up? Who knows? Kamal, got out of my UAL puts today for 35 cents. That's nice. What did you sell those at? Was it 130 or 120 or 150? I can't remember, but that's a great trade on the puts that you sold, Kamal. Excellent. Jackson says, good overview too, Greg. Interpret it bearish also. Risk, risk, risk. Steve says, VIX 10 30-day EMA is a penny away, even right now. And let's go back to that one. Yeah, very close, isn't it, Steve? But if it does cross under, it should be fairly, it should be decent for the market to have that cross under. I mean, of course, it can go right back over, right? But this might kiss. It might come down, kiss, and bounce right back off. But I don't see, any serious buy signals here whatsoever. Just the consolidation. Kamal got him at 150, so he got $150 in premium on each contract he sold, and he only had to pay $35 to get him back. Pretty sweet. Pretty sweet. Nice trade. We talked about that earlier. All right, so let me take a look over here. Blah, blah, blah. So we're up 339. NASDAQ's up. Let's take a quick run through everybody else's. So I know Kamal is okay on his Cisco's. Being he's doing well with Clorox. Steve has a nice trade here on the Qs with the 520 cross. Slightly down on the BABA trades with the 520 cross. IBB up nicely. Let's take a look here. Almost up 4% on the trade for Steve on the IBB using the 530. AGQ up 7.77%. That's the jackpot. Very nice, Steve. Monster up slightly on the Monster 520 crossover. Down slightly on the Amazon with the 5. Oh, what's happening? Down slightly or almost just even. Almost just even on the Amazon. And then excellent trade on Goldman Sachs up 4.23%. So Goldman Sachs and AGQ, big trades for Steve. Congrats, my friend. Okie dokie. So that's about it. I don't see, for me, no new trades except for the overnight SPY. Glenn says, Don Robbins, great effort. I'm feeling uncomfortable with the move up. When I feel this way, the market turns. Same when the market is following. 27.92 is the 50% retracement from the 219 low to the 33.90 high. Yeah, it's right about where we're at, right? I mean, if we look from the 21 low. Yeah, so essentially from the high to the low, and we are right there, almost exactly right there. Dr. Jorgen says, good hike, cool in the desert, a lot of snow in the mountains the last couple days, but sun out now, so off for the bike. Hope Easter Bunny gets its mask and delivers for all the kids. That's true. Come on, my Cisco is going to go to. I had sold $40 call, so the position's going to close over the weekend. Bought 39. Okay, so we're out of Cisco for Kamal. So we're cleaning out some positions here. Hi, Katie. Katie just walked over and says, hey. All right, so we have 15 seconds going into the weekend. All right. So I did buy SPY at 278.20. $278.20, and we'll see if that one keeps on moving or not. But I'll tell you what, it was pretty bleak days with the overnight SPY trade. I even went so far one day I just didn't take it, but that was back here with just the disaster that was going on. I know Lizanne Saunders is never going to speak to me because I skipped one day, but on the bright side, I did pick it back up, and I'm glad I did. Right? That's the point. If you get so discouraged and so beat up, you may just stop right before it starts moving your way. So I didn't want to do it, but I did reduce my position size, which helped. All right, so really good, profitable week so far, a great profitable month. I'm very, very grateful for that for sure. Listen, if you have any other questions or comments, you want to talk about something, observations, look at some stock symbols, please let me know. Before I do that, just want to quickly put in my little daily plug. Hope that's okay with you, but just want to remind everybody that I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I've had really good success with my clients. I do have a course. The course is 5 sessions. Each session is one-on-one with me, and it's between 2 and 3 hours. And during that course, I teach you everything I've learned over the last 24 years as a full-time trader. I teach you everything I've learned from all of my coaches and teachers and mentors like Stephen Burns that I've worked one-on-one with, and with Dr. Alexander Elder that I've worked one-on-one with, Kerry Lavorne, same, and Larry Williams, same. But, between those 4 people, a lot of good wisdom and knowledge and trading experience. And that's what I will teach you in the class. And then also things I developed for myself along the way. So like I said, the course is 5 different sessions in the evening time via Skype. It's live. It is $1,000. I tried to make it somewhat affordable, but I mean, I know it sounds like a lot of money, but honestly, for what you get, I think it's worth really every penny. And so basically the format of the courses is, the first half of the course of each session I teach, show examples, answer questions. Second half, I have you teach it back to me. I throw curveballs at you. I have you break down the charts. Here I'm breaking down the charts, but in my classes, I have you break down the charts, and I say, okay, what are the pros? What are the cons of this chart? What's the risk? What's the reward? Where's the entry? Where's the exit? We talk a lot about trader psychology, scaling out, position sizing, all the stuff. So anyway, if you're interested in maybe doing this course with me, just send me an email. Email's in the description of this video down below. You can also send me a message on Twitter. But before I do take and start working with a new student, I do like to have a Skype call with them. It's totally free and there's no obligation to take the course. I promise you, there's no pressure whatsoever. I just want to make sure we're a good fit. I want to know more about you and your trading and your trading challenges and your goals. And then you can ask me any question as well. And, if our schedules work out, it feels like a good fit, then, we can go on and schedule the call. So anyway, I think you'll be happy with it. So reach out to me and let's get that Skype call. And then secondly, if you don't mind, if you like today's podcast, if it's helping you with your investing and your trading, I really would appreciate it if you would hit the thumbs up button. Helps grow the channel. There's a lot of people out there that need help with trading. They need to just learn some basic trading principles, and I think they'll be happy that they found the channel. But hitting the thumbs up button helps with that. So if you could, I would really appreciate it. Let's see. So Jackson says, Kamal, you should be congratulated for your exits. Good work, my man. 100%. 100%. David, Greg, at which point will you increase your position size? Yeah, that's a good question. Well, the easy answer is once I start getting above the 200-day moving average, David, I will definitely at least go back to a half position, right? Because even regardless of the volatility, if I get a close below the 200, I trade a half position. If it closes over the 200, I'll trade a full position. But with the volatility, I'll just have to wait and watch and see volatility coming down. Actually with, let's see what the VIX did over here. Did it close under? Just using a signal like the VIX being the 10 under the 30. Did it close under? No, it didn't. It still stayed above. You know, that might be one way for me to go ahead and say, okay, the 10's under the 30. That means volatility is declining. Then I could go back to a full position. But the other thing too is just, looking, here, let me open up this chart and see. But, in the past, you can see what regular volatility look like. See how narrow the bands are? But now they're just at least twice as big. So the answer there is, if I get over the 200-day, I'll at least go back to a half position, but I'm still going to need to see volatility shrink a little bit before I go back to a full position. I'll still, instead of a full position, take a half position because the volatility is still high. Kamal, thanks MJ. The IV is still pretty high on UAL. Yep, that's the implied volatility. So remember, the market is not closed, or the market is not open tomorrow. It's Good Friday. So we're not going to be here. So sleep in or do whatever you want, but the market will be closed. So we'll have to wait till Monday to see what this crazy market does again. So yeah, it's Easter weekend or whatever holiday that you celebrate. We have a nice 3-day weekend, so that's going to be nice. Let's see here. All right. So did anybody take any positions today at all? Kamal says, Greg's classes are the best to give you a professional trader's perspective. I have made more money and lost even less money since I took Greg's course. The current price on Greg's course is a steal. I agree. It should go up. I'm kidding. Thank you, Kamal. Well, I've had a lot of businesses in my life, and I've always tried to under promise and over deliver, and I try to do the same thing with the classes. Yep. But thank you. That's very kind of you, Kamal. Well, it's a beautiful day here in Utah. Man, spring just busted out. You see all the buds on the trees, and it's just warm now and sunny, and lots of people are out walking. Huge families. It's like Swiss Family Robinson or Sound of Music up here in the mountains. Just huge groups of families just hiking around. Okay. Little rundown here on Steve's trade that he just posted. AGQ, he's up 7.15%. Goldman Sachs up 4.11%. IBB up 3.54%. Q's up 1.85%. Monster Energy up 0.53%. And Alibaba down 1.87%. And Amazon down 0.05%. Look, that's what it's all about, right? You're going to have losses, but keep them small. And that's exactly what his lineup is looking at as right now. So congratulations, Steve. Wonderful trading. Kamal says, cashed over the weekend, no trades. That sounds like a good place to be. Jackson says, being grateful on so many levels is beneficial for a trader and their long-term psychology. These times have been unprecedented. If stops were hit during this period, don't beat yourself up. For sure. Just because you have a losing streak doesn't mean you're a bad trader. So just because you have a winning streak also doesn't mean you're a good trader, right? But look, it happens to the best traders in the world. They have big drawdowns. So if you've experienced drawdowns, if you position size correctly, yeah, it stung, but you're still in the game, right? It's in my opinion, getting beat up in the market is bad just by itself, but the worst thing that comes from it is that then you don't want to take the next trades. And so many times those are the trades that go. I don't know why that is. That's just how it works. So, it's important to save your trading your actual trading capital and conserve that. But there's also such a thing called mental capital, right? And and being able and willing and wanting and having the heart to take a new trade. And that's tough to do after you've had a huge string of losses. You know how it is, right? Boss Jan says, thank you for today. And I have nice Easter weekend. Perfect. Thank you for coming, Boss Jan. Appreciate it. And I really, really do. And I'm really glad Marco invited you. Jackson says, paying those stops a small wage is imperative. Yes, totally. I'm gonna do a little segment on something Jackson wrote. Jackson's quite the trading psychologist. I think he's found his calling. Kamal says, next up, I need to sign up for Steve Burns' newsletter. 100% you should. I subscribe to it. And what Kamal's talking about is Steve's newsletter, the video newsletter. It's not a newsletter you get in the mail. It's a video that you watch, but I definitely would sign up to that. I watch it all the time. John says, I think YouTube frowns on the word Easter. Well, I said it, so there you go. I'm not sure what else they would call it. All right. Well, listen, I appreciate everybody coming. I really do. I think we have a great group, and I'm very grateful for that. So if you have any other questions, please let me know. In the meantime, I'll just remind everybody, please go out and try to do something nice for somebody today. Give them a call, say hello. They might be in their house, not coming out, right? Give them a call, say hello. I'm sure they would appreciate it. And maybe one day somebody will do it for you too, right? So, all right. Brian says, where's Stephen Burns' newsletter? Brian, it's at newtraderu.com. You like the letter U. newtraderu.com. And it will say video newsletter. But I subscribe to it. I have ever since he's come out with it, and I really, really like it. Jackson says, merci, Greg. Thank you, Jackson. I didn't know you spoke French. Safe weekend and all. Yes, you too. And I'll catch up with you later and see how your trip went. So, all right. Well, last chance for comments. If not, I'm going to get Katie Girl ready. We're going to head out and walk around in the sun on the trails, which is always nice to do after a nice profitable day. Okay. Brian says, okay, I'm going to subscribe to it. Good. I highly recommend it. A lot of times what I talk about here is things that Steve has mentioned in that newsletter. So, okay. Well, appreciate it, everybody. Have a safe weekend. Enjoy the long weekend. Be nice to each other. Go out, do something nice for someone. And hey, if you have a couple hours or an hour, go through your charts. Study your charts. Go through day by day by day. It will give you a good feel for the market. You know, you have a long weekend. Spend some time. Read some books. Read some Steve Burns books or Mark Douglas or Market Wizards, or make good use of your time. All right. Thanks, Dan. Thanks, Kamal. Thanks, Brian. Thanks, Jackson. Thanks, Steve, John, Botsjen. Who else we got? We got David from Colorado, Dr. Jorgensen, Steve Burns, Jeff Stump, Donnie Robbins, of course, Mount Doji, of course. Thanks, Mount Doji. Frank is here. Thanks for the poem. Glenn, thank you. Thanks, Bing He. Hope you have a good weekend, my friend. Andrea, good to see you. Always nice to see you. Get with me so we can get our follow-up done. And let's see. And Marco and Zach and John. Okay, said them. And Bob and Dan. And I think that's about it. Oh, May Neo. Thank you, Greg. Happy holiday to all. Thank you. Appreciate that, May, and appreciate you coming. So, all right, take care, everybody. Have a safe weekend. Be good. Talk to you Monday, hopefully. Bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.